everyone. Today, Stacey, Tram, and I are going to kind of talk about some of the changes that are going on in Texas. Texas has been very active, and Tram is our resident there, so she's super in the know, which we're very grateful of because Texas is really doing kind of some strange things with some very unique, I'd say, probably active or like enactment dates or clarification dates or application dates. Pick a descriptor, and that's kind of what they're doing, all of the above. So I think just one thing that we know for sure, right, Tram, is that previously, there was a lot of discussion regarding the payroll protection loan, the PPP loan that people were getting, that, because of Texas's conformity to the IRC, it was originally going to be, treated as essentially non-forgivable, right? If it were forgiven for federal purposes, it was going to be income for Texas purposes. The state has come back and said, all right, you know what, we're going to allow both the deductions for the compensation within your franchise tax calculation, but you also don't have to include it within your revenue base. So that is one thing that we are sort of certain on, right? And that's applicable for tax reports due in 2021, so is generally your 2020 report year. Now, those kind of the nuance piece where, we'll talk later about the nuances of what Texas is doing is that, okay, well, I already filed my 2020 report before this came out. And so do I have to amend in order to remove that? It's $1 million on big in Texas. That could save us $1,000, a couple $1,000, depending on the size. So, or do I get to maybe credit that forward without having to go back into amend? So that still, right, is kind of unclear.
Right. I would expect the comptroller to provide some sort of guidance as to how that would work, because, obviously there are a lot of businesses who already filed their, franchise reports that were due this year. So I think, once we see that guidance, it'll be more clear as to how we would advise our Texas based clients, as well as those who have to file, even if they're not based here.
Right. And so I think, as you'll hear us say a lot, continue to follow us. Tram is very active in the Texas Society. So she is privy to some, webinars and whatnot that only Texas Society members are, which made me think I want to go get my Texas license so that I can listen to some of these. So, keep following us on that regard, but then also there's other franchise tax items that, Stacey and I really kind of get into the dirty with franchise tax, and Texas is always a unique state in that regard, because it's more or less a gross receipts tax with certain deductions being cost of goods sold, compensation, or just a haircut of your gross revenue. And so a lot of this is kind of what applicable for our clients relates to kind of software and advertising services and associated with the sourcing of those services. So I don't know, Tram, you want to kind of talk us through some of the stuff that you've learned?
Yeah, so basically the comptroller is doing a lot of housekeeping, if you want to call it. So revisiting some of these rules, some of these definitions in terms of sourcing, defining terms such as the internet hosting or computer software, digital property type of items and services. So I think the real big thing here is that the comptroller basically is revising the rules and clarifying what they really mean and how the receipts are being sourced, right? And the big kicker here is that most of these changes are retroactively effective. And most of these changes are going to be effective as of January 1, 2008. There are a few exceptions that, some of the changes or some of the amendments to the rules will apply, kind of more current. But still, we have to go through this exercise of understanding when and how that impacts some of our clients based on, the type of services they provide, or do they, are they really, subject to, those sourcing rules? Are they considered an internet hosting service provider? So things like that, I feel like are pretty important. And then again, you mentioned like the advertising side. You know, they provided clarification as to how you're going to source advertising services. So yeah, that's all fun and exciting stuff. But I mean, I guess the meat of it, if we want to dive into some of that, really, I feel like the definitions are a huge thing.
And I think that a huge thing is the fact that this comptroller views this as a clarification. So we've got situations where, or you know, what we've been following all this time is basically a cost performance test for services, and basically based on time spent performing the services in Texas. So if you're a Texas-based company with, you know, property payroll, you could have a heavy sales factor in Texas, be paying a lot of franchise tax. And now the comptroller is saying, well, actually, we've been, you know, whoopsies. We really mean that, you know, for a SaaS provider, you source to customer location. Well, what does that mean? And the rules look to at least try to provide some examples about that. Or if you're an advertising company, you need to source a different way. So I think that this is, you know, either an opportunity for some taxpayers, or it could actually cost some taxpayers some money, depending upon whether they're in state or out of state, and applying the rules. And then you also have to take into consideration that we've got a statute of limitations issue, right? So, you know, the comptroller is saying that, hey, we've really, you know, meant this interpretation the whole time. I mean, the franchise or the margins tax went into effect in 2008. So they're saying, hey, we've meant this the whole time. So then what are taxpayers, you know, really supposed to do now? What are our clients supposed to do? Should they amend? Should they VDA it? You know, so I think we just need to help our clients figure that out. And maybe the comptroller will come out with additional guidance. I don't know if we know that, Tram.
So it's funny because I think the way this was rolled out was, hey, we're going to provide additional guidance on all of these different, you know, sourcing rules, how we're sourcing these services. And so I think that's kind of the idea of these rule changes. But yeah, I think you bring up a lot of really good points in terms of how is it really going to be, these rules really going to be implemented, how we, you know, advise clients who are impacted by these changes. So
one, especially, you know, Stacey and I are doing a lot of, you know, voluntary disclosure agreements, right? Where effective a date and time, we were going to remit our history. And so, you know, we were, you know, working under the assumption prior to this, you know, for a software as a service company who we've been following the sourcing rules for services. Hey, we didn't think that you owed any money, but now whoopsie, it's actually destination or like customer based. And then I wonder too, if they're gonna maybe clarify, do you maybe on some of this like SaaS stuff get a cost of goods sold deduction now, or are you still only limited to your kind of compensation or, you know, receipts deduction? So there's still just a lot of moving parts and all of this stuff that's happening.
yes, absolutely.
And so I think really with that, you know, keep following us at SALTovation. We're following it just as you may or may not be, and certainly our resident Texan will keep us all compliant. So yeah, keep following us at saltovation.com, and thanks for stopping by.